Hello investors, traders, and cryptocurrency enthusiasts. Welcome to our channel, where we bring you the most relevant news, in-depth analysis, and real predictions about the world of digital currencies. Today we're discussing a major development in the world of corporate crypto treasury management. Bit Digital, a Nasdaq-listed company, has announced it has sold all of its Bitcoin holdings to reinvest the proceeds into Ethereum as part of a new strategic reserve plan. The move was revealed on Monday, when the company shared an official statement on its X account. According to the message, the transaction resulted in the purchase of more than 75,000 ETH, totaling around $172 million, a value similar to what was obtained from selling its BTC holdings. The announcement had an immediate impact on the market, Bit Digital's stock rising nearly 20% in just one day, reflecting the strength of the news. Furthermore, this is not the first time a publicly traded company has made such a decision. In March 2024, Bionexus also shifted from Bitcoin to Ethereum, becoming the first US-listed company to make that move. The justification behind Bit Digital's decision involves a combination of technical, economic, and technological factors. In its press release, the company confirmed it is now adopting a treasury strategy centered on Ethereum. Having sold all of its Bitcoin assets, previously, the company held 280 BTC, but had been gradually selling off its positions since early this year, suggesting this shift was planned. Additionally, Bit Digital raised $172 million through a subscribed public offering, using the full amount to acquire Ethereum. This quadrupled its ETH holdings, which increased from 24,434 ETH to an impressive 100,603 ETH in just a few weeks. For the company, the switch was described as quite easy, given the unique characteristics Ethereum offers, features that, according to Bit Digital, can transform the traditional financial system. Interestingly, the company seems to have adopted a famous phrase once used by Michael Saylor, founder of MicroStrategy, who said there was no better alternative than Bitcoin. Now that sentiment applies to ETH instead of BTC. One of the central reasons cited by Bit Digital for the change is the so-called programmability of Ethereum, something Bitcoin still does not offer at a functional scale. Unlike BTC, which is largely seen as a store of value and medium of exchange, Ethereum allows for smart contract execution, productive staking, and direct integration with the DeFi ecosystem. This set of features opens up opportunities for companies to use ETH not only as a cash reserve asset, but also as an active tool for generating passive income and financial automation. In the statement, the company emphasized that these properties are capable of rewriting the entire financial system, showing an ambition level far beyond simple capital allocation. With over 100,000 ETH in its portfolio, Bit Digital now aims to become the largest institutional holder of the asset, competing directly with SharpLink Gaming, which currently leads the ranking with 188,475 ETH in reserves. It's worth noting that SharpLink raised more than $400 million in June specifically to increase its Ethereum exposure, indicating that Bit Digital's move is part of a broader trend among innovative companies. This new phase of corporate adoption of Ethereum shows that the token is rapidly gaining ground in areas previously dominated by Bitcoin. While until recently, BTC was the natural choice for companies seeking inflation protection and asset decentralization, ETH has been growing exponentially as a strategic alternative. Part of this growth stems from structural changes introduced by the Ethereum merge upgrade in 2022, which drastically reduced the network's energy consumption and introduced deflationary issuance under certain conditions. These factors, combined with the potential for passive income via staking, have attracted more and more companies looking to maximize their digital asset strategies. SharpLink Gaming has been a pioneer in this movement, but other firms are starting to follow, especially those in the technology and financial services sectors. A notable example is Bitmining, a crypto mining company that recently raised $250 million specifically to buy Ethereum. Moreover, the firm hired renowned analyst Tom Lee to lead its advisory board, reinforcing the strategic nature of this decision. Beyond technical and operational aspects, another important factor driving companies toward Ethereum is the strong narrative of utility and innovation associated with Vitalik Buterin's blockchain. While Bitcoin continues to be viewed as digital gold and a store of value, Ethereum has gained traction as the underlying infrastructure for decentralized financial applications. NFTs, DeFi protocols, and even corporate governance systems. Bit Digital clearly recognized this in its announcement, stating that Ethereum's programmability and staking model represent real competitive advantages. The co-founder of Ethereum, Joseph Lubin, recently commented on this new wave of institutional adoption, saying that this shift could accelerate the entry of traditional financial players into decentralized finance. He noted that as more companies adopt ETH as a reserve asset, larger flows of capital will begin to reach dApps, lending platforms and liquidity solutions built on the Ethereum blockchain. This could create a positive cycle, encouraging more developers, users, and even regulators to recognize Ethereum's growing role in the future of the global economy. Despite optimism surrounding Ethereum, the market reacted cautiously to the news. On the same day as Bit Digital's announcement, ETH prices dropped nearly 2%, fueled by speculation around a large ETH transfer to Coinbase. On-chain data showed a significant amount of ETH, valued at hundreds of millions of dollars, being moved to custodial accounts on Coinbase, sparking rumors of possible future sales. Investors feared this movement might signal an imminent liquidation, potentially putting downward pressure on price action. However, experts warned that not every crypto transfer to exchanges means an immediate sell-off. Often it's simply a strategic reallocation or a preparation for new investments. Even with this minor correction, Ethereum maintains strong fundamentals both technically and macroeconomically. The arrival of spot ETH ETFs in the US, for instance, remains highly likely, which could significantly boost institutional demand in the coming months. Meanwhile, the corporate landscape surrounding Bitcoin appears to be losing some momentum. Companies like Tesla, MicroStrategy, and Galaxy Digital still hold large BTC positions, but the number of new entrants is decreasing. On the flip side, Ethereum-based reserve projects are multiplying, particularly among smaller firms and tech startups seeking to leverage the network's functionalities to build more dynamic financial products. SharpLink Gaming, for example, not only bought ETH, but is now using the token as collateral for games, digital payments, and decentralized loyalty programs. Bitmining is also exploring new ways to integrate Ethereum into its mining operations, proving that this strategic approach goes well beyond simple capital allocation. This reinforces the idea that ETH is consolidating itself as a kind of digital financial infrastructure, a concept that may attract other industrial and financial sectors in the years ahead. Bit Digital's move represents much more than a simple portfolio adjustment. It signals an evolution in how companies view the role of cryptocurrencies within their treasury strategies. By choosing Ethereum, the company demonstrates confidence in an asset. It not only serves as a store of value, but also provides practical utility and passive yield via staking. This new paradigm may inspire other organizations to rethink their approaches and migrate to more versatile and functional blockchains. Of course, risks remain, especially in the short term, due to market volatility and regulatory uncertainty. But if Ethereum continues to attract major corporations and expand its decentralized application ecosystem, the mid to long-term outlook looks promising. Meanwhile, Bitcoin faces a moment of reflection, with some businesses questioning whether its lack of utility beyond store of value functions truly positions it as the best asset for the corporate future. Stay tuned here on the channel for exclusive updates, deep dive analyses, and full coverage of everything happening in the crypto universe.